Live from Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stanovac. Welcome to Bloomberg Crypto. A look at the people, transactions, and technology shaping the world of decentralized finance. We got a great program coming up over the next half hour. First, though, let's take a look at where things stand for the last 6 days for Bitcoin. It's been resilient despite this geopolitical shock that has really set energy prices spiking and gold falling. For much of the last month, it's actually held in this range from just around $65,000 up to $73,000. But look at this. Late last night, it broke through to hit close to $76,000 per Bitcoin. That's up around 13% so far this month. I guess the question a lot of people might have right now is this acting like a safe haven? Let's also flip the chart and look at how flows to crypto ETFs have been doing. They're actually surging if you look over the past couple of weeks. Net flows for the 12 U.S. listed spot Bitcoin ETFs topped $763 million last week. It suggests that there's maybe, Scarlett, this return of some institutional confidence.
All right, well, take a look at cryptocurrencies. From Bitcoin to smaller digital coins are definitely standing out this month as winners compared with volatility in more traditional assets. Since the start of President Trump's war in Iran, Bitcoin is up about 13%. Crude oil, we know, has surged more than 40%, while global stocks, as measured by the MSCI World Index, down 4%. Even gold, which is supposed to be the ultimate haven, has slumped about 5%. Analysts say that traders are unwinding their bearish options bets that Bitcoin would fall below the $55,000 to $60,000 level. And as these negative positions are closed out, market makers are then forced to buy Bitcoin to rebalance their exposure. That has led to those inflows, creating momentum to lift Bitcoin's price. The caveat, Tim, is there's an absence of significant call buying. So traders are not, at the moment, aggressively taking on bullish positions.
Okay, well, let's get a test of Mike Belshe's bullishness when he looks out across things. He's the CEO of BitGo. Mike, good to have you on the program. You've been in the industry for quite a while. BitGo plays in this space where they work with institutional investors. They kind of handle the pipes, the infrastructure, and more. I'm curious, when you look across the landscape right now, what you're seeing when it comes not just to prices and the way that Bitcoin is acting right now, but how you would characterize the risk environment.
Well, look, we've seen a lot of cycles from Bitcoin over the years. It goes up pretty extreme. It goes down pretty extreme. It's been a saying for a long time, if you're not ready for my 60% drawdowns, you're not ready for my 600% gains. And that's kind of true. Now, in the market, I think right now, a couple of interesting points. Bitcoin has established itself as a global liquidity venue. If you need liquidity, you can go to Bitcoin at size, 24 hours a day, 7 days a week, pretty much anywhere on the planet. And so it's often one of the first things that will be used to get liquidity when it's needed, whether that's short or medium term. So that causes one side of it, which can be downward pressure at various times. The other thing, we've been talking about for years, that it's a hedge against dollars, fiat, when the traditional system struggles. And what's going on in the Middle East is certainly reminding everyone right now that you could very much wake up one day and have a struggle with your existing bank account, not be able to get a withdrawal that you wanted. Certainly in those regions, access to money is something that is very much top of mind for all of the people that are affected by the current situation. So these two things go at odds with each other. Like on one hand, you've got things pulling it down, which is that it's the best liquidity ever. And on the other hand, you've got some things which are pulling it up, which is that it's proving its thesis in the grand scheme.
So clearly liquidity is very important here as an indicator for where things go for Bitcoin. I wonder how much importance you put on this idea that there's not as much aggressive bullish positioning in Bitcoin right now. The rebound that we're seeing is driven more by hedge unwinds than anything else.
Well, it's definitely been kind of a skeptical market. I mean, this hasn't been specific to the crypto sector. The tech sector is all down, and this has been true for several months. I think there's a number of things from AI to the global crises. They're all causing pessimism, and so that's been bringing things down. But for digital assets, in particular for Bitcoin, those of us that are in the space, we know that this is cyclic. This is it'll go up, it'll go down. It's not a cause for concern.
I want to talk a little bit about the environment right now in the regulatory landscape, because you recently received approval to become a national trust bank. I want to understand how this has changed or affected your business and sort of the roadmap going forward and what it means about what you can do now that you have this.
Well, look, BitGo's always taken a super high regulated path. So we operate 7 custodians around the planet. We're often thought of as being like a custodial provider. What we're really doing is we're providing the foundation of the bottom layer of digital asset technology financial services. So when you think of the traditional system, you've got State Street, you got BNY Mellon, you got JP Morgan. These guys have been around for 100+ years. It's a very well established, very well understood system. So that foundation that you build financial services on is solid. And in the digital world, we've still been building that. Last year, under the previous administration, basically the regulators said they didn't want to participate in this, and so they kind of locked us out. So we were operating under state-level charters. Those were great. They work perfectly fine. We've been securing hundreds of billions of dollars of assets with those. But now we have the OCC National Bank Charter. It's the same level as what you'd expect from any national bank that's handling your securities or anything else. It's the highest standard we can get here in the United States. Very much helps business, helps all of Wall Street have confidence that they can work with us. We've already been through the rigors that they would expect, and so they can get into the industry much more confidently now.
In the current part of this crypto cycle, a lot of people would call it a crypto winter. Which parts of the market are driving the most demand from your clients today? Is it tokenization? Is it something else?
Well, for one, we've got just every brand name coming in the space. I mean, you heard Mastercard's acquiring BVNK this morning. SoFi launched their US dollar. That's on top of BitGo, by the way. They just announced that recently. And then, Citi is there, US Bank. All these announcements are coming out. So all of these cascade on top of each other while the build out is happening. And remember, these large firms, they've got a lot of considerations. They've got large distribution channels. It doesn't happen overnight. So it starts with a planning process. That's 12 months long. Then there's a build out process. That's 12 months long. But all of these things are in play. So we're about to see a big explosion. I think where the most excitement is tokenization of equity. So we have currently some early entrants around, kind of offshore single stock SPV vehicles that you can't trade in the United States. These are going to be figured out how to do inside the U.S. with regulated parties. That's going to completely transform equities.
Okay, so Mike, talk about that, because I was at BOCA last week, the FIA Global Cleared Markets Conference, and tokenization, apart from prediction markets, was like the thing everybody was talking about. Visualize that transformation for us. What does it look like if we live in a tokenized equity world?
Well, number one, you've already seen, New York Stock Exchange and ICE are both moving towards 24/7 markets, right? So we've actually had a need for 24/7 markets for a long time. Probably could have built it without digital assets per se, but it's digital assets that absolutely deserve credit for having driven this particular transformation. Now, the next thing it does is it makes them programmable. So just like what we've seen with stablecoins being a better form of money in that they're programmable, you can use all kinds of applications, you can put in smart contracts, et cetera. Same thing now happens with equity. Some of the features that have been previously reserved for just the ultra high net worth folks now can come down all the way to everybody use. For example, you've been able to borrow against Bitcoin. There's not that many people that have $20,000 of Bitcoin that can borrow $5,000 against it. However, there's a lot of people that have $20,000 worth of Microsoft stock or Tesla stock or whatever. They're going to be able to borrow against that. That'll all be done programmatically. That's going to bring the cost down. The access is going to go way up for everybody.
All right, Mike, really appreciate your joining us today. Mike Belshe is the CEO of BitGo and a regular here on Bloomberg Crypto as well. We talked about a crypto winter. That may be our next guest's big opportunity. The former general partner at Andreessen Horowitz, Ariana Simpson, has invested through several crypto cycles for the VC, and she joins us now. Ariana, great to speak with us. I guess we start big picture, which is you have invested through several crypto cycles. It's not unusual to see crypto take big legs down and then rebound just as strongly later on. What's different this time around?
I think thank you for having me. Great to be here. One of the first things that stands out, I think, is the intersection of crypto and AI, which is definitely taking the world by storm. I think we're at the very early phase of a really interesting intersection there. We have obviously agentic agents taking over the world. A lot of the internet is actually going to need to be reshaped. It wasn't designed for agents. In fact, much of the internet was designed to avoid having agents take over, but now agents are a good thing. They were generally thought of as bots. So I see a lot of opportunity at, for example, that intersection, which is definitely something we haven't seen before.
Yeah, can you talk a little bit about opportunities for companies or for entrepreneurs in this space? I mean, if we think about the way the internet was designed, we don't want it to be designed for bots, as you were saying, because our experience with those formerly has been not so good. But this is kind of this brave new world that we're living in. When you think about investing in companies that are at this intersection, what are you looking for?
Yeah, well, I think a lot of the story really centers around stablecoins. Stablecoins have obviously taken the world by storm. We had the passing of the Genius Act, which really pushed them to the forefront, clarified their standing from a regulatory perspective, and really drove an incredible amount of usage. So in 2025, there was about $33 billion of stablecoin volume. Additionally, or rather as a subset, an additional $350 billion of payments volume, if not more. So we're really seeing stablecoins drive a lot of activity, and that is a pretty new trend. Stablecoins are really an internet native form of money. So, it's very difficult to give an agent your credit card and dispatch them to do things on your behalf. Stablecoins are instead a perfect vehicle for users or businesses to be able to set parameters so that agents can go take action on their behalf and use stablecoins to, buy goods and services online. So I think that's an incredibly interesting intersection. We're already starting to see Stripe, OpenAI, some of the big companies that are still very tech forward use stablecoins aggressively, and I think we're still absolutely in the very early innings of that.
Are you seeing any disruption from the turbulent geopolitical environment that we're in? Has it slowed things down? Has it made investors or companies maybe step back a little bit?
No, I'm a venture investor. I focus on early stage investments, and I think, I'm looking at major technology breakthroughs for the long haul. In general, I think there's still very much a lot of activity in both the crypto sector and the broader tech market. Obviously the markets have been impacted in the short term, but I don't expect that to have any long-term lasting impact.
Ariana, we're getting some breaking news crossing the Bloomberg terminal. Arizona said it filed criminal charges against Belshe for operating an illegal gambling business in the state. It's a significant escalation in the legal battles between Belshe and several states that have accused the prediction market exchange of circumventing gambling laws. We've increasingly been talking about prediction markets on this program, and there is, in some cases, specifically Polymarket, that overlap with the blockchain. As somebody who looks out at early stage businesses and opportunities for investment, just curious about your thoughts on the regulatory picture when it comes to prediction markets and how we're seeing states respond versus the CFTC.
Yes, well, I can't comment on the Arizona case in particular, but I can say Belshe has, gone to battle with the SEC and won. So I certainly think a lot of these questions need to be played out and answered at both the state and federal level. Overall, I think prediction markets have obviously caught the public's attention and become incredibly popular over the last couple of years. Obviously, people love kind of putting out their opinion on what is going to happen across sports, culture, all kinds of different categories. So I would expect that, the proper regulatory authorities should find a way to make these markets, which obviously appeal to consumers, accessible.
Ariana, it's fantastic to speak with you. Ariana Simpson is the former general partner at Andreessen Horowitz, and we hope she comes back soon. Tim?
Hey, coming up next, more news when it comes to M&A. Mastercard buying stablecoin startup BVNK to keep up with the emerging tech. We got the details next. This is Bloomberg.
Today, we got yet another example of a traditional Wall Street player investing in digital assets. Mastercard will acquire the stablecoin infrastructure startup BVNK for up to $1.8 billion. Bloomberg consumer finance reporter Paige Smith has been covering the story, and she joins us alongside Bloomberg Intelligence Senior Fintech and Payments Analyst Diksha Gera. Paige, let me start with you. There's a lot that we know from this deal, but there's also a lot that we don't know. So give us the basics here.
So I would say the basics is, once again, as you mentioned, it's an interesting move for this sort of more traditional financial player to move into the digital asset space. And in particular, as it pertains to stablecoin technology, you think of Visa and Mastercard, these very traditional payment rails, as kind of sticking to their lane, if you will. But really, that's not the case anymore. They're very much trying to kind of position themselves to take advantage of these different forms of payments, whether they're stablecoin technology, whether it's stablecoin, whether it's digital assets across the board. That's what they're trying to do here.
Yeah, I want to bring Diksha into this from the Bloomberg Intelligence team. Diksha, I'm wondering about how stablecoins are going to affect payments, because if we think about it from the perspective of consumers, maybe we don't see the technology, but it's not like it's difficult for us to part with our money these days. So how does this actually change the game, or could it change the game?
Yeah, so Tim, I'm going to put a shameless plug of our deep dive report, which we have discussed at length. Across different payment verticals, we see stablecoins coming up in different formats. To break it down into a very easy way to look at it, the biggest plug we see is around B2B and cross-border commerce. And that's where Mastercard's deal has kind of come into play as well. Remittances is another area where we see a big impact from stablecoins. The area where we don't see much change coming on is more consumer payments. And I think management kind of echoed that concern there as well, like that the cards technically solve the problem for consumers paying merchants, but they are the other gig payouts, remittances, B2B flows, wallet funding, that kind of stablecoins come into.
Diksha, from where you sit, why do you think Mastercard is doing this deal now?
Well, Scarlett, stablecoins are shifting from a niche crypto tool into real-time payments. And we've kind of flagged this across. There are three key things that are driving that change. One is there are a lot more real-world use cases now, and especially with agentic commerce kind of coming into play. Secondly, and very obviously, there's a lot more regulatory certainty and clarity across the board on this. And thirdly, there are a lot more participating banks and fintechs that are building use cases on this. So in that context, I think Mastercard decided that speed to market matters more than building this capability internally. And BVNK already has the licenses, the compliance stack, the multi-chain connectivity, and the orchestration layer that Mastercard would have taken a bit longer to develop by itself or replicate by itself. So it's basically Mastercard buying time, talent, infrastructure to insert a plug and play.
And Paige Smith, come on back in here, because as you pointed out in the piece that you wrote this morning on this news, that it wasn't just Mastercard that has been going after. Coinbase has been going after BVNK. Talk to us about the dynamics there.
Yeah, and I would just echo, Diksha really said it perfectly in terms of just the competitive dynamics here and really why Mastercard is going after this entity now. But, yes, it's certainly been an acquisition target. We sent a couple of headlines a few months ago that Coinbase was actually eyeing the acquisition of BVNK for around $2 billion as well. So, I do think it's really important to just circle back to the idea that Mastercard really is not aiming to disrupt consumer payments with this acquisition. As Diksha said, it's very much more focused on B2B payments, real-time flows, cross-border payments, remittances. That's really where sort of the bread and butter of stablecoin technology is.
And worth mentioning as well, that $1.8 billion price tag includes $300 million in contingent payments as well. So it's a little bit of a moving target.
Not bad for a company that was founded back in 2021, right?
Yeah, not bad at all. Absolutely. All right, a lot more to come, because this is something that we're going to see more of. Certainly these traditional payment rails looking to build out their digital infrastructure.
Big thank you to the team, Paige Smith and Diksha Gera. That is going to do it for Bloomberg Crypto.
Join us again next week, same time. This is Bloomberg.